My name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of foreign exchange markets. The first one I'm going to look at is the euro against the dollar. A bearish harami on Friday, the market moving back down below both the recent 50% Fibonacci line, which is overhead at 119.75, and the middle time of the 2021 bearish Andrews pitchfork, currently at 119.31, though only closing below the former. Admittedly, the market did only close just over the middle time. Now further overhead, we still have the ever so slowly rising medium moving average, currently at 120.47. Whilst below, we now have the also gently rising long moving average, currently at 118.45 entering the frame. Now we also still have target X below in the 118.05 area. This is the target for the action so far in 2021, being a halfway hesitation. Now mind you to think that the market came so close to it last week that you might call it reached. So far today, continuation lower from Friday's bearish harami, dipping below the middle time, but not as yet extending Friday's range. Cable, aka sterling against the US dollar. An interesting key reversal down on Friday, additionally closing below the combination of the short moving average, currently at 139.61, and the more important middle time, currently 139.74, of the late June to late September 2020 bullish shift pitchfork, halting once again before the next overhead congestion at 140 even. So far today, a steady market, not really moving away from Friday's close. We have limited congestion below at 139.05 and 138.25 before the rising short medium moving average, currently at 137.80. Euro sterling. A bullish engulfing pattern on Friday, but only just. I suppose it was not that surprising given the prior three indecisive spinning tops and the hesitancy in trying lower exhibited by this market, even though we'd had a second, third, fourth, fifth and sixth lowest lows since February 2020 in a row. This has been all about how the market approaches the two targets below, target X2 for the second quarter of 2020's head and shoulders top, that's in the 85.15 area, and target X1 in the 84.75 area, the target for the recent sideways triangle. We've been waiting for a while now, and the patience may have started to wear thin due to the lack of progress so far lower. Now so far today, a reactionary move lower, looking almost like an immediate countering bearish engulfing pattern right now. US dollar against the Indian rupee. A third lower, yet still an indecisive spinning top on Friday, breaching but still closing above the 50% Fibonacci line, the July 2019 to April 2020 move at 72.64. Overall, we have overhead the declining partnership of the middle time, currently at 72.87, the early November 2020 to late January 2021 bearish Andrews pitchfork, and the short medium moving average, currently at 72.95, joined now by the short moving average, currently at 72.84. Now, I've recently spoken about how the 50% Fibonacci line was also important for another reason. There was a possibility, just a possibility, that the action over the last 2 weeks or so may have made a possible descending triangle pattern, the base of this on this 50% Fibonacci line. It's still early to say for sure, and it does not look or sit well, but it is worth considering, especially as the triangle is so high and narrow. Hence, a preliminary target X on the downside would be in the 72.05 area, in line with the February 2020 high, whilst the full optimal target X1 will be in the 71.20 area. There's a lot of obstacles in the way, and especially the highs from September 2019 at 72.41, November 2019 at 72.24, January 2020 at 72.13, and of course the February high. So far today, a fresh attempt lower, the market trying to justify the descending triangle idea. We're now below the 50% Fibonacci line at 72.64 and approaching the September 2019 high at 72.41. We've punched through that, but have moved back above it for the moment. US dollar against the Brazilian real. An indecisive spinning top on Friday, possibly forming a tweezer bottom, but not sure as yet. Most importantly, last week was also a weekly key reversal down, though I am not sure how much that helps, as for the last 2 days the market has been held up by the interesting lesser 38.2% Fibonacci line of the May to June 2020 move at 552.90. Now this lesser Fibonacci line is interesting because it provided the flat trend line necessary for the recent bullish ascending triangle. That ultimately provided last week's high at 587.25. US dollar against the Mexican peso. A reactionary bullish harami and also a possible inverted hammer on Friday. The combined support of the lesser Fibonacci line at 20.60.62 and more importantly the very recent 50% Fibonacci line at 20.58.49 held up the market. Meanwhile, on top, the market was once again framed by the lesser Fibonacci level at 20.90.39. So far today, steady to a little lower, looking like an immediate countering move right now, though so far shy of testing the support properly below. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.